At PDAC 2018, we're joined by Jayant Bhandari, analyst mining in metals at Anarcho Capital. Jayant, thank you so much for joining us.
Thanks for having me, Vasudha.
Okay, let's talk about President Trump's big announcement imposing those steep tariffs on aluminum and steel. What could it mean for gold in the long term?
I don't really think it has a huge influence on gold price. I am very much oriented towards free market, and I don't like restricting trade by the governments. I think it always have unintended consequences. I'm as such ambivalent about what Trump is doing, partly because I have been a supporter of Trump, but I wish he hadn't imposed tariffs on steel and aluminum.
But don't you think these protectionist measures and this talk of a global trade war ensuing very soon is going to have a bearing on the dollar market, the equities, and also that anxiety could seep into gold?
I don't necessarily think so. I think it might actually improve the economy of the US. A lot of business from the US has run away in the last couple of decades. America really needs to bring in some manufacturing and industry back to the US. So I must emphasize, I don't like restrictions on trade. They should have actually deregulated the economy faster than they have. But there's only so much Trump can do in terms of deregulating the economy. So putting restrictions might be his way of bringing the industry back to the US, and I think it needs to come back to the US.
Okay. Now, you have asserted in the past that the enthusiasm around certain resources like lithium, cobalt does not necessarily translate into making wealth for investors. Talk to us about that.
So let's say, for example, cobalt price has skyrocketed in the recent past. Share prices of cobalt companies have skyrocketed in the recent past. Now, what should I do? If I invest in those companies, are they actually going to generate enough return for me to justify the share prices that I'm buying those companies at? What you really need to do is to buy these companies when no one else is looking at these companies, and commodities when people are not really looking at those commodities. In those cases, what happens is that the value of those commodities and those companies tend to be higher than the price you can buy those commodities and companies at. When the herd starts looking at those companies and commodities, what happens is that the prices of those shares and the prices of those commodities start to go much higher than the value of those commodities and companies. As a result, you would position yourself to make a loss by doing so. So the one rule of thumb is not to follow the herd. Have your own opinion on what should work, what might or might not work, and invest that way.
Okay. Investors have largely shied away from the mining sector in the last few years. Now that there is a trickle of investors returning, what would you advise them? How should they play the markets? And any resource stocks that are on your mind?
I think what is actually happening, and I have seen this happening for the last 18 months or so, good companies are actually doing a very good job in terms of share price appreciation. People should focus on good companies run by good managements and good projects. Do not invest in companies that have been there forever, drilling projects that have been there forever. Invest in selected managements and selected projects, and that is the way to make money in this sector.
Okay. And going into 2018, what's going to dominate the headlines in terms of precious metals or base metals, gold?
I think gold is actually something I'm very excited about. And the reason I'm so excited about gold is because there are a lot of geopolitical problems in the world which actually the world does not really comprehend properly. So, for example, just before we started recording, we were talking about South Africa. People have been very happy that Zuma has been fired from his job as the president. But really what is coming next is going to be much, much worse than Zuma. Corruption is actually a good thing in these countries. It provides safety valve for people to escape the regulatory suffocation. So, but now if you have new populists like what you now have in South Africa, things will worsen a lot. The same is happening in most of the third world except for China, and that will mean that people's wealth will become very risky. People will be afraid of their governments and afraid of their societies, and the civil situation, the social situation in the third world across the board, except in China, will continue to worsen. The world sees those countries as a future of economic growth. The world thinks they are emerging markets, and they are not. And when then, what I said, that reality starts to become more visible, gold will become very important for those people.
Okay, thank you so much for your insights, Jayant.
Thank you very much for having me.